Now platinum is trading at a historic undervaluation relative to palladium, relative to gold, and even relative to silver. So it's more speculative, but it's got more upside. But let's say the silver to platinum ratio returns to its previous high. That would mean platinum outperforms silver by 5. Let's just say silver goes to 50. Let's call that a double, and platinum outperforms silver by 2. That would be a quadruple in platinum. So that would be $4,000 platinum, and I think that's pretty conservative over the next 1 to 5 years.
It was brought to my attention, and maybe this is just noise. A lot of the information that I get is noise. That's what I'm trying to ask people about it and sort of work through it. And by the way, anyone can see this on the usdebtclock.org, I believe is the correct pronunciation. The world reserve of platinum is far lower than both that of gold and silver. Okay, that's a fact. And that's not the biggest deal here. But what I did notice is that the production change since the year 2000 has been the lowest for platinum out of those three. So platinum, gold, silver. It's about 20% lower than the growth in production of gold and almost 40% lower than the production growth in silver. Okay, so the growth is really slowing down. The growth in production, not the production, but the growth in production. Yet we have, we still have, I guess, we're still working through a supply surplus. At least for now, specifically, with the supply disruptions in 2021, which might sound a bit counterintuitive, but it caused auto producers to cut back on their platinum demand because they weren't making any cars, so they weren't needing any platinum. But with the growth in production accelerating, then this could eventually turn out to be positive, I guess. But I really don't know. I don't understand most of it, and honestly, I'm just kind of confused as to where platinum is going and why. So maybe you can just give me like a good version of your case for platinum in 2022, Steve.
Yeah, sure. Platinum is, when you asked what can outperform silver, my answer is right away platinum, because it really is so undervalued. It's much more speculative in my mind than silver. So it's not, makes up a relatively small percentage of my portfolio. I want to have 20% of my physical metal in platinum. That's my goal. And then eventually swap that platinum for gold as the ratio normalizes. But yeah, back in 2015, your listeners might remember there was the Dieselgate scandal. Yeah. And that's the biggest industrial demand for platinum is in these catalytic converters in diesel engines. So when the world kind of swore off diesel, that put a lot of pressure on platinum. And now platinum is trading at a historic undervaluation relative to palladium, relative to gold, and even relative to silver. So it's extremely undervalued. And yeah, that Dieselgate thing was a headwind, but I think it's more than factored into the price right now, and all the potential bullish catalysts are not being factored in like at all. So platinum is such a small market. It's 30 times more rare than gold. Roughly 70% of the production comes from South Africa, which is highly unstable, and the production is falling. Like you said, it was, I think, just over 5 million ounces a few years ago, and then it dropped to like 4 million. That's a big drop in production. And if you include recycling, it's 8 million ounce market per year, about 6 million from mining, 2 million from recycling. That's really small. And there's demand drivers from the industrial side. And then I think investors, this is the wild card, when they're looking for undervalued contrarian investments, platinum just makes a lot of sense for a lot of people. And if just, a small percentage of people in the world say, hey, I want to have a couple ounces of platinum, that skews the supply demand fundamentals in our favor.
It reminds me of a time when I was a child, not too long ago, still am in a way. But so we'd play these games, like we'd have small races with our bikes, and then we'd get up on the ladder, and someone would get a bronze, and then a silver, and then a gold. And then, somebody would come flying by and they'd say like, hey, I got the platinum medal, meaning, I'm way better than everybody else, because platinum was so much more expensive than gold back then. It was just a normal thing. Everybody knew, like, you've got gold, but then you have platinum, which is way better. I mean, that's the thing that I've noticed from commodities in my childhood. That's my exposure to commodities in my childhood. And if we look at that ratio right now, platinum is at about $1,000. I'd love gold to be at 2,000, but that'd still be, a gold to platinum ratio of 2 to 1, which is, again, isn't that like an extreme? Isn't it extremely high, which is due to, looking to change? And if we assume that, what ratio are you looking for gold to platinum or platinum to gold to go to, and what does that mean for the price?
Yeah. So if platinum returned to its historic ratio, platinum would outperform gold by about a factor of 5. I'm going with silver. It would outperform silver by a factor of 5 to return to that previous ratio that we saw about 15 years ago. And I don't remember platinum to gold ratio, but it's undervalued. It's deeply undervalued. And there are just small instances of these historic anomalies going back for decades, where platinum traded at a discount to gold and to palladium. And those historically present opportunities. And we're seeing a historic undervaluation of platinum right now. So yeah, I think let's just say silver goes to 50. Let's call that a double, and platinum outperforms silver by 2. That would be a quadruple in platinum. So that would be $4,000 platinum. And I think that's pretty conservative over the next, 1 to 5 years.
Yeah, I also think it is. And also because I asked somebody on Twitter about it. I'm probably going to find and put the screenshot on the screen. I asked, are you thinking we could go back to that historical platinum to gold ratio of 2-to-1, where platinum is twice the price of gold? But if you're bullish on gold, you want it to go to 2,000, and platinum is going to go to 4,000. Is that what you think? Because right now we're at about 1 divided by 1.8 be like 0.55, I guess. But so he said, 4,000. He sort of laughed at it, and he said, try 15x that. So it was kind of funny, but I guess it's in the realm of theoretical returns that could be great as well.
Well, and I didn't want to sound outlandish. I think 4,000 is very conservative. But let's say the silver to platinum ratio returns to its previous high. That would mean platinum outperforms silver by 5. And if you think silver is going to 100, that's a 4x on silver. That would be a 20x on platinum from here. So that's $20,000 platinum. And that would just be history returning to those ratios.
Okay, now we're also mostly talking about the technical side and sort of the numbers side, and I'm trying to make sense of it in terms of narrative. A lot of the narrative is noise, but fundamentals matter, at least to me. So if we start taking into account the fact that from the last data that I saw in 2018, the average production cost for 1 ounce of platinum in South Africa, where by the way most of the world's platinum comes from, together with Russia, the price was at about $1,000, which we're at right now. But if we start thinking about that 4,000, how would that measure up fundamentally? Maybe a better question here would be, what's the main driver for platinum prices fundamentally?
Yep. So fundamentally, we talked about investment demand and industrial demand. So two things there on the industrial side that I didn't mention. One is substitution. We're seeing early signs of a massive trend underway where automakers are going to start substituting platinum for palladium. Palladium is over 2 times the price of platinum, which is a major historic anomaly. So it only makes sense for these automakers to start doing that. And we're seeing that in the import numbers from China. They're starting to import a lot more platinum, a lot less palladium. So that if just a small percentage of those cars switch to platinum instead of palladium in their catalytic converters, that's a major supply shift in the supply demand fundamentals. Another one, and this
I'm sorry to interrupt here, Steve, by the way, but
sure.
I had a question about it. When it comes down to platinum and palladium, maybe maybe you don't. But does a car manufacturer use the same exact amount of platinum as they do for palladium to get the end gold, or do the end goal, not gold? Oh my God, what am I thinking? Yeah. But so to get the end goal, do they use the same amount? Is it exactly substitutable, or how does it work?
I know I've heard it said from the research, the in-depth research I've done, that they are perfectly substitutable. As far as quantities, I have to assume that's the case, but I can't say that with 100% certainty. It's a really good question.
But this could change if you need a lot more platinum than you need palladium, not only is the demand going to go up because of the switch, but they're going to be needing more, so that could be even more bullish or bearish depending on how it turns out. But yeah, anyways, please continue. Sorry to interrupt.
Sure. And then the last one that is a little bit of a wild card. I mean, I'm highly confident this trend is going to continue, and that's hydrogen technology, specifically hydrogen fuel cell vehicles. Mm-hmm. And we're already seeing money shift into hydrogen. It's part of the green agenda. We're seeing a big push towards this in Switzerland. We're seeing major corporations like Hyundai investing heavily into hydrogen. Mm-hmm. And there's a lot of benefits to hydrogen over the battery electric vehicles. And these hydrogen fuel cells use a lot of platinum. So, I think over the next decade, that's going to be another thing that skews those supply demand fundamentals in our favor.
What about the charts? What are the charts telling you right now? Can maybe pull up a chart of platinum?
Yeah, I'd love to. And if it's okay with you, I'll just start with the ratio of gold to platinum.
Please.
And it's forming a very interesting technical pattern. First, this goes back to 2008, and you saw this very clear kind of resistance line, this downtrend line. Well, we kind of tried to break above it a few times back here, and then in early 2021, we broke above this resistance line, and now we're back testing it, and you've got this triangle pattern. I really like triangle patterns because you typically get a sharp move one way or the other. And I'm expecting an upside breakout here as we approach the apex of this triangle sometime in 2022. But what's even more compelling is when you compare platinum to silver. I mean, I hadn't looked at this ratio chart in a long time, and I was stunned. I had to ask myself, like, is this accurate? So I've been saying silver is the most undervalued commodity on the planet for so long. Looks very similar to the platinum to gold chart, except we haven't broke above this downtrend line yet. We're getting close, and you can see this support trend line right there. And this apex is going to be, this pattern is going to resolve in the next few months, one way or the other. I think it's going to resolve higher. And, you know, you can see we're almost ready to break out right here, right now. And if we return to this ratio back here, 150 to 1, like I said, that would mean platinum outperforms silver by 5. I think it's a higher risk speculation, but so I'm not selling my silver and buying platinum, but I want some exposure to it just based on these ratios.
Okay, if it's a higher risk profile speculation, though, how would I want to jump in on this train, though? Because I'm not on it, but say that I do want to jump in. Is it ETFs? You mentioned physical, or is it a mix of it all? Stocks? What would you? I mean, what do you suggest?
That's the challenge with platinum investing. So I think of it as kind of like 4 vehicles. You have physical platinum. You can do the ETF, PPLT. That's got some problems. You can buy mining stocks. A challenge there is you won't find any pure play platinum miners. They just don't exist. Platinum is a byproduct of nickel and palladium and other battery metals. So you're going to get a lot of exposure to other base metals as well. And then finally, the fourth would be the futures market, which I wouldn't recommend for 99% of the people. So the way I'm personally doing it is, number one, physical metal. I'm trying to get that to 20% of my total physical allocation. Physical platinum, and then a handful of mining stocks. Most of them, in my opinion, are garbage. I currently own 2. Jeff Clark's done write-ups on them. I'm not going to mention the companies here, but 2 of them are I think worth speculating in. And then PPLT, that ETF. I mean, that's fine if you just want exposure to the price, but JP Morgan's the custodian. I think they do similar shenanigans that they do with silver. So I just can't bring myself to do that, but if you want just exposure to the price, PPLT, there is there's fees, expense ratios with that.
Yeah. And so it's worth also noting that PPLT is a physical ETF. So you're essentially buying paper platinum, which might be a suggestion of you adding to the problem. But we're not going to cover that in here. Sure. What percentage of your portfolio have you currently dedicated to platinum? Is it larger than uranium?
No. So I think before I said 80% silver. That's not accurate, because right now uranium is about over 20% total of my total mining stock portfolio, and platinum is. I want to get it to closer to 10%. If I remember right, it's about 8 or 9% in the mining stock portfolio, and I'm trying to get that up to 10.
Okay, so you're trying to get it up to 10, because that would be my follow-up question. How do you expect that to evolve in the future? Is there a certain set of rules that you have, like when you say, if this happens, I'm going to make platinum 10%, and if that happens, I want to make it 5%, or how does that work for you?
I do have a lot of hard and fast rules, but not in this case. I'm just looking at it and saw that I had 4 or 5% exposure, and I'm like, I want more than that. 10%, just there's no formula or anything. Just 10% makes sense to me.
Does it mean? And this may not make sense, but does it mean that relative to gold and silver, platinum is currently earlier in its cycle than gold and silver are? Is that correct to say?
Yeah, I think so. Typically, it's very common for gold to move first, then silver plays rapid catch up, and then platinum can play catch up after that. So I think that's a baseline expectation, put it that way.
But don't they all like peak together? Don't they all start going down together?
Yeah, they do. They typically peak at the same time, but like I said, they pop at different times. Gold goes first, then silver plays catch up. Although, I don't want to contradict myself here, but based on these ratio charts that are approaching the apexes of those triangle patterns, I think platinum is going to begin outperforming silver and gold.
Okay, but that just means that the platinum cycles are shorter. Is that, I mean, if they start going up later, but then they peak at the same time, that means they're shorter, right? And then that therefore more difficult to catch and therefore higher risk. Is that making any sense?
Yes. Yeah. Yep. I see your logic there. Yeah. 100%. I would agree with that. And,
Okay.
and the demand factors like uranium, it's pure supply demand. The world's going to need more uranium. And to get that, we need a higher price. I mean, it's just pure supply demand. It's very clear reasons for the speculation. Silver, I believe we're headed towards a currency crisis because the debt situation doesn't have a solution and they're going to have to debase the currency. So like I see these things as almost inevitable. Where platinum, it's more speculative. Maybe the hydrogen stuff doesn't come to fruition. I think it will, but maybe it doesn't. Maybe the investors don't turn to platinum as an alternative investment. So it's more speculative, but it's got more upside.
Okay, higher risk, higher return. No, it seems to me like I have a lot more work to do, but I have your newsletter to help me guide me through it, and I actually use it. I for once read it. I am what do you call it? An affiliate. Obviously, if somebody signs up through the link below, I will get a commission from that. But what we talked about throughout the last, almost an hour, looking at the clock here, going forward, and when we talk about your portfolio, that's how you plan on managing the newsletter portfolio, right, Steve?
Yes, and the newsletter portfolio is my portfolio, so we're kind of unique that way in that it's an over-the-shoulder service of exactly what I'm doing. You get access. I show you the exact stocks I own. And it's not like I have some other resource portfolio that no one knows about. I mean, people see exactly what I'm doing. I don't get everything perfect. I don't get every turn correct, but at least it's fully transparent over the shoulder service.
Okay. And that's like $9 a month, right? Like I'm guilty that I'm not paying for it because you're obviously too kind to give it to me, but it's $9 a month, right?
Yeah, we might raise it to 12 or something like that. But the idea is to reach more people, and there's a lot of people struggling, so we want to keep it inexpensive. So yeah, it's 9, 10, $11 a month, maybe 12.
Okay, I think it's extremely cheap anyway. So, Steve, you're doing a good job. I really appreciate you. We've actually covered quite a lot in here. I'm happy with it so far. But is there something that you had hoped we'd talk about, but I forgot to bring up?
No, I think we covered everything.